Good day, and welcome to Apollo Pipes Limited Q1 FY2025 conference call, hosted by Antique Stock Broking. As a reminder, all the participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, Mr. Manish.
Thank you. On behalf of Antique Stock Broking, warm welcome to all the participants on the Q1 FY25 earnings call of Apollo Pipes. Today we have Mr. Samir Gupta, Chairman and Managing Director, Mr. Arun Agarwal, Joint Managing Director, and Mr. Ajay Kumar Jain, CFO on the call. Without any delay, I would like to hand over the call to Mr. Gupta for opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, Mr. Gupta.
Good morning, everyone, and thank you for joining us on our Q1 FY earnings call to discuss the operating and financial performance. I urge everyone to look at our financials on consolidated basis, that is including Kisan financials, as it has become our integral part of Apollo Pipes. Our strategy is to cover whole of West India and some of Central India through 3 plants of Kisan. Our sales volume increased 25% to 26,500 tons. You may see that the volume was flat YOY excluding Kisan, mainly because of decline in government infrastructure business, which is catered by LGPE sales. This was due to elections and late budget. The EBITDA for the company increased 11% YOY with 10% margin profile. We are glad to share that Kisan turned profitable after many years. The consolidated profit declined 10% YOY due to higher depreciation. We are confident that there will be solid recovery in North and South markets in coming quarters on the back of brownfield capacity additions. In terms of other updates, we started the first line for PVC-O pipes in Q1 FY25, which is a highly profitable product. This has placed Apollo Pipes among top companies in India to cater such a product segment. 2 new lines will become operational by the end of FY25. Our another project to add UPVC doors and windows profiles is on track, which will further strengthen APL Apollo presence in the building material segment. Varanasi expansion is on track, which will add 40,000 tons to our overall capacity. With this plant, we will have a pan-India presence. Total capex is around 150 crores. I am glad to share that our balance sheet remains debt-free despite such commitments. Our financial and sales team have worked wonders to improve working capital to 30 days. We look forward to achieve revenue growth of 25 to 30% CAGR for the next 4 years. We are also confident of hitting 25 to 30% of ROCE despite these proposed investments, supported by working capital efficiencies. This is from our side. Now we are glad to take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the opportunity. So just want to understand on standalone, what is the standalone correct volume number?
20,900.
Okay, 20,900. Got it. Just want to understand what are your future plans for Kisan? What are the other levers? How margin of Kisan would be improved? It's heartening to see Kisan EBITDA positive after many years.
So if you see that Kisan did a revenue of 65 crores in quarter 1. One needs to look at the quality of this revenue, right? If you look at last quarter of FY24, the number was much higher. But at that point of time, the company was mainly doing project business. which was they were taking advances from the project contractors, and then they were just doing OEM kind of business. That was the majority of sales volume what the company was doing, and you can see that that was not profitable. Also at the operating level, the company was making losses. But since we took charge of the company in April, our focus has been on the trade sales and to leverage the Kisan brand, and also our own experience of building a strong distribution network in the plumbing pipes. So that's why you could see the EBITDA of 5 crores for the quarter, which would be after many years of business operations. You would appreciate that. Going forward, we want to take this sales for Kisan to 450 to 500 crores in the current financial year. That's what our target is. Then in the following year, take it to around 600 to 650 crores, and eventually around 750 to 800 crores by FY27, with 10% of EBITDA margin. To achieve these numbers, we don't see much of investments apart from what we already did in Kisan. There will be some brownfield capex for the plant modernization, but we don't see much of investments going into that. And given that the focus is on quality sales in trade channel, the working capital requirement also will be as per the industry norm between 30 to 40 days. Which can also be funded from the bank limits. Now we are working with Kisan. So we in the Q1 we already started working on implementing the SAP, which will help the rationalization of purchase and sales, etc. And our team, including top management, is spending a lot of time in Kisan plants to ensure that the quality matches as per the Apollo standards, and also changes in the mid-level and low-level team at Kisan plants to boost up the production and sales in the coming quarters.
Understood. That is 10% EBITDA guidance is for this year?
For Kisan or for Apollo?
Kisan I'm talking.
So Kisan, see, I mean, in Q1 you saw 7-8% of EBITDA margin, right? We plan to sustain these levels for full year, and going forward in next 2 years we plan to take this company at 10% to 12% EBITDA level.
Understood. Got it. I just want to get a more clarity on the capex side. Your PPT clearly illustrate, what are your plans of capacity expansion. If you can give a exact timeline when this capacity will come and what sort of capex it will incur, and what is the capex guidance for this and next year?
Capex, if you see, there are 3 projects which are undergoing in Apollo Pipes. Number one is our Varanasi plant, which is taking maximum exposure in terms of capex spends, followed by OPVC lines. Here the majority of capex is done. First line already started, and rest 2 lines will start by end of this year. And third, the new product category, which is window profiling. It's a pure housing building material segment which we are planning to enter. This will also be ready by end of this financial year. And then after we are done with this, then our plan will be to expand the capacity in southern India, right? Whether we do buy land adjacent to existing plant or we set up a larger plant, we will evaluate that. So the capex spends last year was quite heavy with almost 200 crore plus capex and plus Kisan, right? Next 2-3 years we will be doing around 100 to 150 crores on annualized basis, which will be mainly funded from the internal cash flows and plus the balance equity infusion which is due from the promoters and employees as part of the preferential allotment.
Understood. Got it. And Varanasi is expected by Q4 FY26. And what is the capex size of this plant?
The production shall start. Production shall start that time.
Understood. Got it. That's it from my side. I'll come back in queue.
Thanks.
Thank you. The next question is from the line of Himansh from Safe Enterprise. Please go ahead. Himansh, your line is unmuted. You can ask your question.
Hello, am I audible? Hello.
Yes, you are.
Yes. Yeah. So thanks for the opportunity and congratulations on quick turnaround in Kisan Molding. Sir, has there been a shift in sales from Apollo Pipes to Kisan Molding, some sales that have been diverted because of, if you look at the standalone performance of Apollo Pipes, it has been fairly weak. Also, the initial commentary you mentioned that few non-trade sales to B2B projects were there in the base year or base quarter. Can you also quantify that? Ex of that, how has the growth been? Also, in Kisan, with high agri-mix portfolio, we have a targeted margin of 10%. Then considering Apollo Pipes, which are much more favorable product mix, what is the targeted margin for standalone Apollo Pipes over the next 2-3 years?
Coming to question one, we don't see any cannibalization between Apollo brands and Apollo and Kisan brands because Apollo wasn't strong in Western India anyways. We were catering through a very small plant in Ahmedabad, right? So looking at how Q1 panned out, we don't see any concern of cannibalization. In fact, what we want to do is we want to run both brands parallelly, so that we together jointly we could take market share from the other smaller and unorganized players. And as far as whatever the feedback we have got from our clients and the sales team which is on ground, we think it is a better strategy to run both brands parallelly, and both brands have their own set of customer base and target markets. So we continue to run both brands parallelly. It is just the fact that now that we have such a solid presence in West India through Kisan, so Apollo will not, there is no point of Apollo adding up new capacity in Ahmedabad or putting up any new greenfield plant. So whatever expansion has to be done in West India, it has to be done through Kisan. We are very clear on that. Other than that, Kisan also caters to some Central Indian markets. There also Apollo is catering by a smaller plant in Raipur, although that will change by end of this year with the commencement of our Varanasi plant. So then we will go aggressive towards the East India, but again Central India is somewhat which was a bit of virgin for Apollo. So Kisan comes in and fills in the shoes for that.
Okay. And the targeted margins for Apollo Pipes over next 2-3 years?
Given that new value-added products like OPVC pipes and window profiling and our increasing sales in CPVC and fittings, right? So Apollo should move towards 12% to 13% EBITDA margin. But as of now, we will remain around 10% for the next 2 years because of a lot of capex which is coming online. And until the capacities are utilized, you will see the negative operating leverage coming into play. But once we are done with our 286,000 ton capacity expansion and ramp up, the margin should inch up towards 12 to 13%.
So, the reason for volume growth, and despite the capacity expansion that has been robust for us over the last 1-2 years, and even our base is very small. So any reason for volume growth lower than peers? Anything you would like to highlight? Anything with respect to competition or anything? And another thing is with respect to this the infra pipes. Can you quantify the volumes in the base quarter in June quarter? June 23?
Sure. So, see, that's the point which we are trying to make is that if you remove the infra segment, which is catered through HDP sales, right, last quarter it was around 15%, okay, and this quarter it collapsed below 5%. Okay, so if we look at our trade sales, X of HDP pipes, our volume increased by 10%. Okay, X of HDP. So this does demonstrate our continued market share gains and leveraging our brand and distribution network, right? And this will be further boosted by the new capacities which will come online. Plus, also in Q1, the PVC prices were also pretty volatile, which again led to confusion among the channel partners about destocking, restocking. So I guess now whatever the stability comes in the PVC prices, that will allow our channel partners to restock. So we are not overly concerned about Q1 flattish for Apollo pipes, because we know that was driven from collapse in our HDP sales, and that also we believe is a one-time event because of elections in Q4, Q1 plus delayed budget. Now the budget is gone. The government projects will get all the fund allocation. So those sales will recover and come back, right? And you'll see that performance in the coming quarters. But anyways, that's a separate business. Our core focus has always been to build our B2C business, right, through trade, through our channel partners, and work on the high-end products, right? For that matter, I want to highlight that our CPVC revenue was up by 20% on YY basis in Q1, and our water tank segment also increased by more than 30% on YY basis. So all these value-added products are growing at a good pace for us. It's just unfortunate that one segment collapsed, and optically our numbers appear flattish, but things are going okay for us.
Thanks a lot, sir. I'll come back in.
Thank you very much. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Abhishek Anand from Fintrust Capital. Please go ahead.
Hello, good morning. So, a few questions from my side. So, in the PPT, I mentioned that the CAGR would be 25% for the next 3 years. So, and you could see that there are few capacity expansions which will be live only from FY26. So, how would you take forward for the to be 20% in the years?
So, unfortunately, your voice wasn't too clear, but as I'm able to understand is you are asking about the revenue guidance for the next 3 years.
The CAGR, which is you mentioned in the PPT, it is mentioned as 25% for the next 3 years. So, the CAGR growth. So, how would you take forward with that?
No, I'm very sorry. We still are not able to hear you properly. I think you are on speaker, or can you turn off your speaker and can you say it again?
Yeah, is it fine now?
Slightly better.
Yeah. So, how would the company go for the CAGR growth for 25% for the next 3 years, since it is mentioned that capacity expansion would be done for like 3 years from now?
So yeah, we did revenue of 1,000 crores in FY24, right? And FY25, FY26, FY27, we believe that we should be more than 2,600 crores of revenue by FY27, right? So you can calculate CAGR here, whatever it comes out to be. and we have a full-fledged business plan on which we are working to achieve these numbers.
Okay, right. And sir, could you also mention why in the PPT is it stated that your current focus is not on oil and gas and telecom production, as the sector is currently booming right now?
So see, I mean, as of now, we see a very large opportunity in the housing plumbing segment, right? That's where our focus is, and that's where our strong distribution network also comes into play, plus the brand pull what our group has built over the last many years in the construction material segment. So we don't see any need to evaluate other segments in the plastic pipes, given that we are going to almost triple our revenue and profits in the next 3 years. So right now focus is on the housing construction segment.
Okay. All right. Okay. And one last question, Kisan Molding. Could you state that when was this acquired?
Say it again, please.
The Kisan Molding, which was acquired by Apollo Pipes.
Mm-hmm.
Yeah. So when was this acquired on date?
Acquisition date?
Yes.
Just end of March, last week of March.
End of March, okay. Okay, and the revenue which you have generated from them?
68 crores.
68 crores? Okay. All right, thank you so much, sir.
Just for everyone's benefit, we have given the numbers for Kisan and Apollo Pipes standalone, including sales volume, on slide 30 of our investor presentation.
Okay, sir. Thank you so much.
Thank you very much. The next question is from the line of Deepak Mandana from Avigna Investments. Please go ahead.
Hello, am I audible?
Yes, you are.
Okay. 2-3 sets of questions. One is, if I look at quarter upon quarter for Apollo Pipes, the sales have been stagnant from March 2022, and we have been almost 10 quarters now with almost no growth. And considering that we are keenly more into the housing space, the real estate cycle in last 2 to 3 years has grown tremendously. So aren't we seeing any volume uptick from that side of the segment in terms of pipes that are used for housing plumbing?
Yeah, hi. So see, I mean, if you look at Q1 FY24, right, it's been like 5 quarters. We have been around 21,000 tons, right, which is like flattish sales volume. But what is happening is that you need to see the quality of sales, right? Like I said, in Q1 FY25, if we remove the HDP sales, the project sales, right, our volume would be up by 10%. Okay, ex of HDP sales. So we have been expanding our products. We have been expanding our distribution network. We shouldn't be saying that we acquired Kisan plant. Because Kisan plant was just a plant, right? So it is as good as putting up a new plant and ramping it up, right? So that's the exercise what we are going to do, or which we are already doing. We started doing in Kisan, right, at its Tarapur plant. So it is just that last few quarters, right, there was good thrust from the government sector on Nal Se Jal Yojana, right? We also got orders, although we were never aggressive. If you look at the companies, almost like 25-30% of their volume sales were coming from HDP, but for us it never crossed 15%. Okay, because we didn't want to take orders at lower margin or with poor payment terms. Now that 15% is down, is below 5%, right, for Q1. Okay, So barring this, like I said, we are growing our trade channel sales, right, by 10%. And with our Varanasi plant, with our other products like OPVC pipes or window profiles, right, and Kisan ramp up, we are going much faster than the industry.
But don't you see, for example, when the housing and when the government was into Jal Mission, these were also the time that the revenue could have peaked for us. It could have grown much more faster. The reason is, even if it's a low margin business, it was a good opportunity to get a market share. Don't you feel that we have missed out that opportunity?
No, we are very happy by losing out those orders. Okay, you should look at the financial health of the companies who were like doing 30-40% of such business through LTT. Right, we were very clear that we will not build unnecessary order book just to pad up our sales or earnings.
Okay. And can you tell me what has been such a high increase in terms of employee expense as compared to last Q1? It has grown by roughly around 8 crores. Is it new addition of people, or is it any other thing that has been a one-off expense, a one-off type expense, something like that?
Yeah. So you're checking Concall, which includes Kisan. Ex-Kisan, it's not that great an increase.
Okay. And lastly, how do you ensure you had launched UPVC pipes, right?
No, OPVC.
Yeah. So what is the revenue that you foresee from that in this year, and what is the EBITDA margin on those? Because I believe that is a lucrative margin business. That is what I believe you had said in last quarter as well.
Which it is. So this year, the first line started in Q1. The other two lines will start by end of this year, right? So this year on overall revenue, my contribution from this segment should be around 5%, right? And next year, when all the three lines will be operational for full 12 months, the contribution should be 8 to 10%.
Okay. And what would be the EBITDA share of this?
So it's it's a very restricted technology, right, which we got access to. We are not too comfortable sharing much details about this, please.
No
but it is much higher than what you see on our numbers on blended basis.
Okay, and just the last question. We had got...
Deepak, may we request you to return to the question queue for follow-up questions, as there are several participants waiting for their turn.
Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. First question is pertaining to the ASP calculation as per the numbers that you have reported. So Kisan's ASP seems to be higher than APL, whereas we are saying that the HDP contribution has dropped. So what was the product mix for APL this quarter?
No, this will have to repeat your question, please.
Yeah, so I was trying to understand, when I look at Kisan's blended ASP, it is at around 120-121 rupees, whereas the same for APL is 115 on the standalone basis that you all have reported. So how come it's APL's ASP lower versus Kisan? What was the product mix for the quarter?
So see, mainly it is product mix. Okay, Kisan, like I said, till last year they were doing low quality sales for projects, etc. Right. This year we focused on mainly fittings, right? Because that used to be the strength of Kisan brand, and that's what we started working with them to build the franchisee stronger on the strengths, right? Which is their fittings. Product portfolio, right? So that's why you see a bit of better NSR for Kisan versus Apollo.
Understood. And for FY25, just on the APL volumes, what kind of volume growth should we expect for 25?
So revenue, you should expect around 25% increase for Apollo Pipes on overall basis, and Kisan will be additional.
Understood. And any quantum of inventory gains or losses for the quarter?
No, Udit.
Okay. I have follow-up. I'll come back in the queue.
Thanks.
Thank you very much. The next question is from the line of Yash Modi from Ashika Group. Please go ahead.
Yeah, good morning, sir. Thank you for taking my question. My first question was with respect to this OPVC pipes. Was there any revenue that we booked in Q1 with respect to OPVC, or is that expected from Q2 onwards?
Very little.
But the first line that got operational in Q1, that revenue should start flowing from Q2 for the first line, right?
That is right.
Okay. And secondly, sir, like in last call, we said the 350 crores of EBITDA breakup, as in 100 crores from OPVC and the window profile, 50 crores from our 50% stake in Kisan, and 150 crores from the core business, the original business. So if I look at the PPT, we say that our tonnage for this OPVC pipe and window profile is shown as 11,500 ton. So by FY26. So in this calculation of 100 crores of EBITDA from this profile, are we just taking in this 11,500 tons, or are we adding some additional lines in that FY27 guidance that we have given? Hello? Am I audible? Hello?
Yeah. So,
Yeah. So
this pertains to OPVC, right? Which we are not too comfortable sharing, but on combined basis, the OPVC plus window profiling, the EBITDA on absolute basis would not touch 100 crores. I think there is some confusion in your understanding.
Okay. No, I was just referring to the last quarter Concall notes, and it said, like, when some participant had asked this 350 crore of EBITDA breakup, at that time it was 150, 160 crores from core business, 90 to 100 crores from this segment, and 100 crores from Kisan, of which 53% we own, so we had taken 50 crores. So I was just looking at that 350 crore of EBITDA breakup that we had projected for FY27. Maybe I'll take it offline if...
Yeah. So rest all is okay. It's just that 100 crore from OPVC and window profile is slightly high. It should be around 70.
Sure. Thank you. Those are my questions. Thank you so much. Those are my questions. All right.
Thank you very much. The next question is from the line of Shikhar Mundra from Vivek Commercial Limited. Please go ahead.
Hi, sir. So what is the CapEx plan for the next 3 years? How much of amount is remaining to be invested?
So the balance capex for Varanasi, right, and for window profile plus some brownfield expansion is around 250 crores, right, and then investment into South India will be over and above this.
Okay. And how much are we planning to invest in South India?
Any big plant, it should look at investment of around 200 crores minimum.
All right. And so for the target of 2,600 crores in FY27, is South India also part of our plan?
Which part?
Is South India also part of the plans for the 2,600 crore target we are setting for FY27?
No.
Okay, so that's over and above. But the 250 crores in Varanasi will be a part of the plans in order to reach 2,600 crores. Is that right?
That is right.
Okay. All right. That's it from my side. Thank you.
Thank you. The next question is from the line of Tushar Vasuja from Yogya Capital. Please go ahead.
Hello, am I audible?
Yes, you are.
Thank you for the opportunity, sir. So I have a few questions. So first one is, how much have you spent on Kisan facilities for debottlenecking and efficiency up until now, and how much more will you spend?
So nothing has been spent as of now, right? going forward, we don't see investments more than 20 crores to do whatever modernization that needs to be done there.
Okay, so last question, what's your utilization for Apollo Pipes and Kisan?
55%.
Is that consolidated or only for Apollo?
Individual. So separate also we are around 55%, and Concall also around similar number.
Okay, sir. Thank you.
Thank you very much. The next question is from the line of Nitin Gandhi from InnoQuest Advisors. Please go ahead.
Thank you very much. What will be the maximum revenue potential from the existing plant, Varanasi plant, OPVC, window profile, and South India? Separately, if you can give, or consolidated, if it's beating 2,600 crore.
See, I mean, again, we don't want to highlight much of OPVC, right? But what I can tell you is that Apollo currently should be around 1,400 to 1,500. Kisan should be around 700 to 800. Then rest will be Varanasi plus OPVC plus window profile.
Can you share at least Varanasi max revenue potential?
Then nothing much will be left, right? We can take it fine. Yeah.
Fine. Thank you.
Thank you very much. The next question is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, you are.
Yeah, great. So you mentioned that standalone volume growth you're targeting for FY25 is 25%. Is that understanding right? Kisan will be over and above?
That's right.
So first quarter being flattish, that would imply 35% growth in the 9 months.
Right. We will get boost from our OPVC lines, plus there could be some business recovery in the HDP sales, right? And then overall, Varanasi will also contribute somewhat in Q4, right? So we have all the right levers to show this kind of growth.
So Varanasi is expected by when? In the presentation, it means FY26.
No, we should have 2-3 months of business operations for Varanasi if everything goes well, which it is.
Okay, on full capacity, 30,000 are you targeting? Varanasi 30,000 capacity, you're saying will be operational for a few months in FY25 and also.
Yeah. 70-80% of that should be available in Q4. Yes.
Okay, and this window profile 11,500, even that would be operational by end of this year fully?
No, window profile will not be there. I mean, maybe few days of production, but nothing significant.
And this, how much is the capacity number for both of them, OPVC, because this is getting commissioned in 2 parts. One line you have already done, and second in Q4.
Sir, no, so we have given the capacity breakup in our presentation on slide number 22. But what is your question?
No, 11,500 is between OPVC and window profiling, right?
Right.
So separately, there are 2 different products. So separately, how much is the capacity?
Breakup because of sensitivity about OPVC.
Okay. And you on the capex front, just coming to the capex front, you mentioned that you would be doing 250 crore, which is towards the Varanasi and the window profile. So when you mean window profile, that would also include the OPVC, right?
Right.
In Q4, I think you had mentioned that you will be spending for you had given a number for this OPVC. Was it something like 100 crore towards this project?
That is right.
OPVC and window?
No, only OPVC. Windows is separate.
Okay. You had mentioned something so the company would be spending 200 crore next 1.5 years, 140 crore in OPVC and 60 crore towards the window profiling.
That is right, because we are considering adding new lines already.
Sure. No. So out of this 250 crore, this alone takes up 200 crore. So I'm not just trying to get the maths that from this are most of the capex for Varanasi already done, and hence just 50 crore is needed. Yeah, what is the total capex for the Varanasi project?
So see, window profile we just started. So almost 90% of capex is yet to be spent. Varanasi we are done 50%, 60%, right? Rest will be done in the next 2-3 quarters. OPVC 50% is done, right? Rest 50% will be paid to the suppliers as the machines come.
Okay, so possible to give how much is the total Varanasi cost?
150 crores.
150 crore, okay. And 200 crore will be towards the windows and OPVC, out of which some is already done and the rest will be executed in next 1.5 years.
OPVC will be done in next 6 months, no? When both the two machineries are reaching our plants.
You mentioned first line is already operational for OPVC.
Yes, there are 3 lines. 1 line is operational, 2 lines are pending. We will give the payment to the supplier when the 2 lines reach our plants, right?
Okay.
No, I guess. Okay. What is it you want to verify? Can you please?
No, nothing to verify. I just wanted to understand how is the total project cost. This 250 crore is coming up, so that is also the only thought process.
Right. So, and 150 is Varanasi, right? 50 should be balanced for OPVC and 50 for window profiles.
Okay. And next year, how much you're targeting? FY26, what would be your capex number?
So next year we are projecting 150 crores, right? There could be some residual capex for Varanasi, some for OPVC, some for window profiles. Plus, we will start looking out for opportunities in Southern India. Yeah.
Okay, and that will again flow through majorly in FY27.
26 and 27, that's right.
Okay. So this around 150 odd crore plus another 150 odd crore we can safely assume for FY27.
That is right.
Okay. And this will have an additional revenue stream beyond the 2600 crore that you are targeting.
Yeah.
Okay. Great. Thank you. I'll come back in queue.
Thank you very much. The next question is from the line of Utkarsh Nopani from BOB Capital. Please go ahead.
Hi. Good morning, sir. So my first question is on the revenue guidance part. So we have been missing our top line guidance for the past 3 consecutive quarters. And now we have guided a revenue growth of 25% for standalone operation and 450 to 500 crore for Kisan for FY25. So this implies a 37% asking revenue growth run rate for standalone and more than 100% for Kisan at lower range of revenue guidance for the remaining 9 months of FY25. So is this a realistic assumption? Wanted to know, and are we going to see such kind of a growth from second quarter itself?
So just to break it down, right? Apollo did 1,000 crores last year, right? This year we expect 1,200, 50-60 crores from Apollo, including whatever contribution we get from OPVC, Varanasi, somewhat window profiles, and of course the existing business, including recovery in HDP sales, right? And then Kisan should be 400 to 500. We don't want to give this range is wide for Kisan because we just don't want to do poor quality sales. We are focusing on quality sales, right? And as a resultant, you can see that the company turned profitable also in Q1 since we took the company in our hands, right? So the number could be from 1,650 crores to 1,750 crores, right? base you can take 1650 crores. Last year was 1000 crores. Q1 number is 308 crores. You can do the maths. And whatever we are saying, we are confident that this should be achievable. Yes, there have been few quarters where we missed the guidance. But even like last year, we used to say that we will grow by 25%, right? But we grew at 21-22%. So on the overall annual basis, the miss is not as bad as one would think, right? Yes, last few quarters have been slow because of whatever reasons, elections, etc. Right, and we see good momentum picking up in the business from Q2, Q3, Q4.
Okay. And sir, like, what would be our gross margin guidance for standalone and Kisan operation for FY25 and 26? And what is the agri and non-agri pipe mix for standalone and Kisan operation for June quarter?
So for Apollo, the mix would be 55% housing and 45% agri. Okay. As far as the gross, I mean, it is better to look at the margin at EBITDA level. Apollo pipe should be around 10%. Okay. The gross margin should be higher by 100 bits, but because of the front-end cost owing to the new plants, the EBITDA margin would remain flattish. And
okay.
Kisan, 70% is agri today, but this is again high quality agri because of good sales mix from the fittings products, right? So Kisan, we are happy with this mix. Okay, it could be like 60-40 in 2 years, but given that business has turned profitable, it is showing decent operating margins. We are happy with this mix.
Okay. So, like, lastly, in the June quarter, Kisan gross margin turned out to be better than Apollo standalone operation by around 200 bits. Is this going to be maintained going forward?
Like we said, on Kisan, we are working on its strength, which is fittings, right? Presence in the fitting segment. So if we continue to see momentum in that segment, Kisan could do better margin than Apollo.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Nikhil Agarwal from Kotak AMC. Please go ahead.
Yes. Good morning, sir, and thank you for the opportunity. Just wanted to confirm, like you said, CPVC revenue growth was 28% year-on-year, right?
20%.
20%. Okay. And can you help with the volume?
No, we don't disclose the volume.
Okay. And what about the price trajectory of late for CPVC?
The price should be on the upper side because of some anti-dumping, new anti-dumping coming into the picture. The prices should be on the upper side for CPVC.
For CPVC.
Yeah.
Okay. So do you see this coming down going forward, like by the year end, because many capacities are coming in?
The CPVC you're talking about?
Yes, sir.
Yeah, CPVC, we don't see any price coming down despite the capacities coming into the picture because as you see that the prices are mainly governed by the international market, and if the international market will be up, then there will be no local or domestic players. They will be selling at lower prices.
All right. Understood, sir. That's it from me. Thank you so much.
Thank you. The next question is from the line of Pankaj Kumar from Kotak Securities. Please go ahead.
Yes, thanks for taking my question. Sir, you said this year standalone Apollo, we are expecting 1250 crores revenue, and by FY27 you are targeting 1600 crores. So that implies roughly 13% CAGR in next 2 years. So this year, of course, we are targeting 25% growth, but next 2 years there will be a sharp moderation despite Varanasi plant coming on stream. Is this the right understanding?
How much you said for FY26?
FY25, you are guiding 1250 crore revenue in the standalone business. And FY27, you said 1600 crore revenue from Apollo Pipes.
No, it will be around 1600 as per our current business plan.
Okay, so that excludes your OPVC windows and all those.
Oh, includes including all the new products and plants. Ex Kisan, our revenue target is 1600 crores.
Yeah. So 1600 crore revenue over FY25 1250. So I was just working on that. So that gives you 2 years CAGR of 13% after FY25. So is this the right understanding? You are seeing moderation in the growth from FY25 on after FY25?
It will come at 27%. 1250 into 1.27 is 1600 crores.
Okay. Anyway, so you are comfortable on the sustaining this growth rate going ahead?
That's right.
Okay.
Thank you very much. The next question is from the line of Ujjain Shah from Molecule Ventures. Please go ahead.
Hi, sir. Sorry, I joined the call late. So just wanted to know on the OPVC side. So how we have been taking this product and how we have been evolving and what are the capacities will be coming in next 1 to 2 years and the capex. If you can just tell me on a brief side.
Like we said that we are a bit sensitive about disclosing much information on OPVC. It's a restricted technology which only few companies in India has access to. So I request all the well-wishers of Apollo Pipes to maintain the sensitivity of information on this product segment. But just to answer your question, the idea to get into OPVC is that in the larger water infrastructure projects, this product is replacing DI, which are ductile iron pipes, right? And this product is cheaper. It is easy to install, easy to handle from the EPC contractors. So it throws a very large opportunity in the country for the next 5 to 10 years, given the focus on water infrastructure from the existing government, and it is not similar to HDP pipes, because HDP pipe there is no entry barrier, right? Here the entry barrier is the capital investment, entry barrier is the access to technology. Entry barrier is the product approval from the government authorities. So we are, as of now, given the current situation, we are pretty bullish on this category. And like I said, next year it should be contributing less than 10% to our overall sales. This year it should be around, it should be less than 5%. So that's how the ramp up will be.
Sir, on the contribution side, you are talking about the consolidated 10% or just Apollo Pipes revenue by 10%?
Console.
And
again, we urge the participants to please consider Kisan as integral part of Apollo Pipes. I want to reiterate that although it may appear that we acquired the running company, right? But the work what we are doing in last 4 months to ensure that the quality of those sales is much superior than what that was being done earlier, right? It is as difficult as to start a new plant and ramp up the volumes, right? This is what we are doing in Kisan, and we are very proud of it. So I request all the analysts to consider to incorporate Kisan as our West India plant while looking at our numbers.
Sure. Sir, on the OPVC, how many lines we have been planning to integrate in next 2 years, and what are the CapEx we are planning to do, and how many lines currently running in our plant?
Again, it's about our future plans to expand into this OPVC. We are not too comfortable talking at this moment.
Okay, so current capacity or current line consideration.
Sorry, Mr. Ujjain, may I request you to return to the queue for follow-up questions? There are several participants waiting.
Sure.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the opportunity. So just a couple of clarifications. You've spoken about this, but I got a bit confused. The 2,600 crore top line guidance that you've given is for FY26 or FY27?
FY27.
FY27. And the Varanasi opportunity, the Varanasi plant that we've spoken about, that will start commence operations by Q4 FY26, right? Or FY25?
Q4 FY25.
Okay, they'll start in FY25, okay. And just one last thing, that for CPVC and for CPVC, the raw material that we source, is it sourced locally only? Because there are certain capacities in India.
Locally,
okay. And for normal UPVC also, it is sourced locally only?
50% imports, 50% local.
Okay. Understood. Yeah, that's it from my side, sir. All the best for the future. Thank you.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, good morning. Am I audible?
Yes, you are.
Yes, team, with respect to our outlook on PVC now.
We can't hear you.
Karan, you're not audible. Your voice was breaking.
Hello.
Yeah. Can you repeat?
Just wanted your outlook on PVC, that is for the medium term, and how do we see the channel frequency?
No, Karan, I'm sorry. You need to repeat yourself, please.
Yeah, am I audible now?
Yeah.
Yeah, I'm saying with respect to your outlook on the PVC prices, for the medium term, and how is the channel inventory as of?
Regarding the PVC prices, right now it has rised up in the last month and again dropped in the current month, and we see some more drops on first week of August. So that should be near to bottom, and again there are some anti-dumping news in the sector on PVC resin prices. So if that comes, then again that prices could be increased by 5 to 10% or around 10 to 15% depending on what exactly the anti-dumping, you can say ADD that comes on the product. So it should be on the near to bottom price and should be on upward from next month onwards for PVC prices.
And how are the channel inventory as of now?
Channel inventory, because of disturbance in the prices in last month and last quarter, the channel inventory was, you can say, trying to encash that profit of sudden increase in that price. They decreased the channel inventory drastically, and right now they are at, you can say, minimum level of inventories, and we hope that in the coming quarters, again when the prices start to build up, then they will start building up their inventories.
And this is where we are factoring in 30% plus kind of volume growth for the rest part of the year. Okay. Thank you. Thanks for the clarification. That's it from my side.
Thank you very much, ladies and gentlemen. That was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you all for patiently listening. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our team. Thank you once again for taking the time out to join us on this call.